Have you ever felt like the big boys in the industry are trying to squeeze you out of your market? I've heard this from numerous self-storage owners, and I want to give them the actions they can take to not only compete, but to beat the REITs. I thought to myself, why don't I just ask some of the most brilliantly successful giants in the world of self-storage and ask them what they're doing to compete in their local markets? And so, that's exactly what I did. I sent them the following message. Let's say you wake up one day and suddenly your self-storage business is surrounded by the REITs. I know you have lots of ideas, but now you need to focus on what I call your zone of genius. What is one strategy, one action that you're passionate about? It can be related to operations, marketing, sales, or revenue. Attendees of the summit are looking for not just what you do, but also how you do it. With all of our different speakers, collectively this summit will be presenting an amazing full circle of actions to help self-storage operators not only compete in the local market, but to dominate. So, are you ready to play? And with that message, the responses from these amazing storage minds have been flooding in and will be presented to you in the free Beat the REITs virtual summit. To claim your free ticket, go to beattheREIT.com. See you there. Hi everyone, this is Jim Ross, the Self-Storage Show. Today's segment, we're going to do another storage talk. I got Terry Campbell with me today from Live Oak Bank. What's up, Terry?
How's it going, Jim? It's good to be on here again.
Yeah, because I always count on you. Reliable Terry, you'll come on and attention and help me out with this kind of stuff. I appreciate it.
I absolutely will.
It's just fun. I like doing this kind of stuff. Plus,
same here.
in this day and age, hey, we can do it virtually. It's all good.
Yeah, I mean, you're known as the man that does these things now. So you've developed the reputation.
Yeah, it's kind of fun. We got a few projects coming out that's going to be exciting. So
Awesome.
it'll be part of it. It's going to be fun. But anyway, we're kind of doing a segment here. I've had a few of the guests that have come on so far. It's kind of fun. I just kind of go on Inside Self Storage, all their talk forums. And again, for those of you that haven't checked it out, again, Inside Self Storage. It's called Talk Forum. It's really cool. A lot of Q&A and stuff going on in there. So a little plug for those guys. But I go on there and find a couple questions I think would be up the guest's alley. And so I got a couple here for you. So
Awesome.
we'll start off here. What do I got here? Okay. If I can read, my glasses, it's too small. Right.
I know the feeling.
Okay.
Your arms aren't long enough.
I know. Okay, number one. All right. Thinking of using an SBA loan to refinance my existing storage facility. Does anyone have direct experience with SBA loans, pros and cons? Well, there you go. You're the SBA guy, so I figured you'd be the perfect person to bring
pros and cons of the SBA loan. Well, they're both. There's the pros and cons to any loan. Depends on what your situation is, what works for you. The pros and cons with the SBA loan. Let's start with the pros. The pros are with an SBA loan. You've got the 7A, you've got the 504. Kind of break it down with the 704. The pro, one of the pros is that you can get in for as little as 10% equity. You know, if I know that specific question was about refis, but SBA loans in general. If you're going to do a new construction, you're going to do a conversion, you're going to do an acquisition, then you can come in as little as 10% equity. That was a new rule. There used to be there was no minimum equity, but they changed it a couple of years ago, so there is a minimum. You really need to have some skin in the game. You don't want to be that highly leveraged in case there's a problem with the economy. We're seeing a little bit of scares and things going on right now with this coronavirus.
Imagine that happening.
Yeah, imagine. But that's one. Another one is there are no financial covenants with the loan. I've talked to folks over the years that had other types of loans, and during the recession in 2008 recession, banks were consolidating. Some banks were, reevaluating their portfolios, and they were finding that the loan to value covenants were being broken. That, so many properties, the value just dropped on property. So people were involuntarily in a bad LTV situation. They were breaking their covenants. They didn't even know it in some cases. And I talked to a few people that actually got a knock on the door from the bank and said, hey, you're out of LTV covenant. and we've got to correct this. You're either going to have to come up with enough cash to get this back in line, or we're going to have to foreclose on you. And the thing is that they were doing everything right. They were working hard. They were making their payments. Their business was actually doing fine, and there weren't any kind of trouble. And for, you know, to get this, they were blindsided. And some of the folks that I've talked to that experience that sort of thing said they don't ever want to do another loan that's not an SBA loan, just because there's no financial covenants. Well, there's really one financial covenant, and that's you pay your bill every month. That's the only one. As long as you pay your bill, they can't come after you. There's no debt service coverage ratio covenants or things like that that you have to live within. I mean, whenever you're looking at doing the loan, you've got to show in your projections that you're going to reach a certain debt service coverage ratio by a certain time. But if after the loan's closed, if you don't actually hit that, there's no, you know, debt service coverage police that are going to go out here and say, hey, wait a minute, you know, you're not in line, so we're going to have to foreclose. With the 7A, another pro is that let's say you're building an existing facility. You're going to have a period of time from the day you open the door until you break even. And, you know, how do you cover the bills between those 2 dates? You know, that's when the real, as I call it, pucker time is. The pucker factor is you know, okay, we've, you know, all the excitement's gone now of the construction, and now we have a finished product we're looking at. Now we've got to get it full. All these units need somebody in to rent them. So with a 7A, you know, you can also potentially include the working capital and interest reserves to make the payments and help you get through that period of time, so that you can make payments until the facility can carry itself. So those are 3 pretty strong pros. One of the and I don't know if the next one's a pro or a con. It's there's a 3-year prepayment penalty. That's all it is, 3 years. You know, some people, you know, think it's a long time, but 3 years actually, if you're a building facility, by the time you get it built and open and full and stabilized, 3 years is probably gone.
Yeah, exactly. You're there anyway. Yep.
Exactly. So you can look at that at a pro or a con, depending on, you know, where you stand. Another con, I guess a con, is that you do have to, there is no such thing as a non-recourse SBA loan. So you're always going to have to be personally responsible for that. You're going to have to sign, you're going to be a guarantor on the loan. You may or may not have to pledge over some assets, like could be your home. Certain states you can't do your home, they won't allow you. So if you've got real estate, let's say that the appraisal comes back and you're not appraising at the full amount you need to be fully collateralized, then they will ask you for you to pledge some real estate if you've got at least 25% equity in that real estate. Now, if you don't have the equity, then we go to the next step. We're going to ask for life insurance to cover that deficit. And if for whatever reason you can't get life insurance, we've had this scenario. They didn't have equity, and they could not get life insurance because the guy had prostate cancer. Even though he's fine, at one point he had prostate cancer, he couldn't get a policy. So basically we checked the boxes. So there again, that's a pro and a con. It's a con because if you've got it, you may have to pledge it depending on where the value of your facility comes in on the appraisal. And you know, then again, we can still go by that and not have to go past it, I should say. If you don't have that equity, then we still may be able to do it. Now, let's jump over to the 504. There's pros and cons on the 504. Right now, the pro with the 504 is that the way the 504 works, let me give a little background real quick. The 504 works is 50% of the 504 loan is provided by the bank. It's basically a conventional loan from us. The SBA kicks in 30 to 40%, depending on certain situations. So the borrower's going to put in 10 to 20%. I say as a rule of thumb to expect it to be 15. And these are perfect for acquisitions, and I'll get to that in just a second. But that's the structure. 50% from the bank, 30 to 40% comes from the SBA, and 10 to 20 comes from the borrower. depending on certain circumstances, and we all have to do this. Now, there's what we call a CDC involved, a Certified Development Company. They're basically a nonprofit that's a liaison between the borrower, the bank, the SBA. So you've got to get the bank on board. The bank's got to approve it. The SBA has to approve it. The CDC has got to approve it. So you got to go through all these processes. So it's a little longer, a little more arduous. But right now, that portion that the SBA is actually providing, the 30 to 40%, you can get it fixed for that portion, fixed for 25 years for as little as like 2.92% right now. It's mad. It's madness. It's crazy. I mean, it's just part of the stimulus too. I mean, it had been going down over the last year, but this is like the lowest it's ever been for that portion. And you can keep that 25%, I mean, that portion of the SBA's loan in place for the full 25 years if you want to. Now the bank is going to be in it for at least 10 years, and they've got to provide you for at least a 10-year loan, but it can be fixed, it can be variable. The rates and terms and things like that are going to be different with the bank's portion of that program. But again, you can get rid of the bank after 10 years if you want to and get another one, or pay it off and then keep the remaining portion of the SBA loan, of the debenture as we call it. So that's a couple of really good, I mean, that's a really, really good pro right now. Yeah. Like I said, for an acquisition, we look at that. For most of the acquisitions we're doing, we're suggesting that program because it's just so strong and it gives folks such a good position right now. So you better take advantage of it while you can. One of the cons with that program is the prepayment penalty on the SBA portions is it's 10 years long. There's a formula of how they do it. It's not quite as bad as it sounds, but it is a prepayment for 10 years. So you're not going to get out of their portion. The bank, they're going to set theirs, however they want to. It could be 5, could be 10, could be somewhere in between. So that's kind of some of the pros and cons, in high level on those two types of SBA loans.
Man, you're the man. Go all in depth and all that. That's okay. Thank you for doing that. That's fantastic. Sure. I think you're more than. That's why I like doing this, because again, like on the forums are great. You can type your answer, but it's just nowhere close to being able to have an actual
right
face-to-face answer like that. So, and I'm also going to be posting these kind of links to the videos in those answers too. So people that have that thread, it's great. They get more in-depth answers. So
absolutely. And you know what's funny is you get, and I'm just going to throw this out there for what it's worth, is there's several forums out there. There's several Facebook forums out there. There's folks, and I'm involved in a lot of them. Sometimes I'm just silently, lurking and watching and reading and listening. Some of them I'm kind of active in, but when somebody actually has had an SBA loan in their life, maybe even in the last couple of years or so, folks may ask a question like what you just read to me that came off of Self-Storage Talk. And I'm not specifically talking about these guys or this situation, but I do see in a lot of these things where folks have had some exposure to an SBA loan. And when someone asks a question like this, suddenly that person is giving advice. And it's well-meaning advice, it's well-meaning, but a lot of times I see stuff that's just out and out wrong. I see, folks that are experts, quote unquote experts and gurus,
exactly,
that are sharing advice and talking about these programs when it's not always exactly right. And I don't, want to step on toes or, upset anybody, but sometimes when I see information that's wrong, I have to put it out there. And sometimes, it's wrong information because the bank maybe that or the lender they were dealing with gave them incorrect information. But I see stuff that clearly is not accurate. You can look at the SBA SOP, which anybody can go online and find it. Just go to sba.gov. You can find the SOP, the standard operating procedure, and you can look through there and you can see, it's really fun reading, but you can go through and look for anything that you want to find. But sometimes, like I said, folks that they get on there and they give incorrect information. So, talk with people who do it day in and day out. It's like, we're the #1 SBA lender by dollar volume in the country. So, we do tons of it all over the whole country all day long. So we're constantly in it. When updates come out and when the SBA changes rules, we know about it right away. So the guy who got a loan a year ago, maybe even 6 months ago, may have remembered, hey, this is the way it is, but wait a minute, it just changed 2 weeks ago, and they don't know that. Again, it's well-meaning advice, but sometimes it's not accurate. Go to the people who are the experts, the ones who really are in it every day.
Well, that's why I went to you. That's you're the leading source. That's why I went to you for those kind of questions. So
we try to be. We try to be.
You are. I don't want to say try. You guys are. Just for the sake of time, we're going to do a part. I have another question, but we're going to do it another day because I really want to focus on this one. We went so in depth on that one. That was fantastic. So I kind of touched on it a little bit, but for people who want to get more info and have more questions about this kind of stuff, how do they reach out to you?
They can reach out to me directly. My direct number here at my desk, my direct line is 910-202-6933, or my email address is Terry, Terry .Campbell, that's CAMPBELL @liveoak.bank.
Perfect.
It's .bank, not .com, but liveoak.bank. And they can go to our website, liveoakbank.com, and you can check out everything we've got on there.
Okay. Great website, by the way. Another little plug, but yeah, you guys have a lot of great information there. So it's a good site to go to.
Education's helpful.
Yeah, totally. That's what we're doing this. That's awesome.
That's right.
All right. Well, thanks a lot, Terry, for taking the time. We will do it again. I promise.
All right. That's great, Jim. Thanks again for having me. I appreciate it.
All right. Sounds good. See you,
Take care. See ya. Bye-bye.